Hello everyone, and welcome. In this video, we'll explore Turkey's key economic developments from June 24th to June 30th, 2025. We'll dive into the stock market and FX dynamics, central bank actions, inflation, growth, labor markets, trade, sustainability initiatives, and defense spending. With detailed analysis, we'll examine the why behind each indicator, evaluate potential short and medium-term implications, and outline what lies ahead. On June 30th, the BIST 100 index surged by around 5 to 5.8%, reaching a three-month high at approximately 9,950 points. This spike followed a court's postponement of a high-profile case challenging the CHP's leadership, originally scheduled for trial over allegations related to an Istanbul mayor's arrest in March. The delay, now pushed to September 8, eased immediate political risk and lifted investor sentiment, particularly in banking, construction, and financial stocks. Simultaneously, the Turkish Lira strengthened by about 0.3%, hovering around 39.8 TRY USD. While modest, this move provided a crucial window for the central bank to begin or continue rebuilding foreign reserves, assets depleted during earlier market turmoil and intervention efforts. Investor optimism, however, remains fragile. The real uptrend is being seen as a temporary relief rally, with analysts warning that the broader uncertainty, tied to delayed elections and judicial interventions, persists. On June 19, the Central Bank of Turkey (CBT) held its one-week repo rate at 46%, keeping the upper corridor at 49%, signaling an extended tight monetary stance. Governor Karahan later emphasized that such discipline is crucial to navigate these turbulent times and anchor inflation expectations. Additionally, the CBT imposed tougher reserve requirements on FX deposits and TL repo operations, pulling nearly $4.6 billion from the banking system. A renewed $5 billion swap line with China also supported FX liquidity under the central bank's gradual reserve replenishment effort. As a result, net reserves have climbed to an estimated $37.40 billion, a recovery from recent lows. In May 2025, Turkey's annual inflation dropped to 35.4%, with monthly CPI at just 1.53%, its slowest rise in 5 months. This decline reflects cooling demand, subdued food inflation due to good crop production, and tighter monetary policy. Despite this progress, real interest rates remain steep. The policy rate is 46%, while commercial lending rates hover between 55 to 60%. This stance aims to tame inflation but has started weighing on economic activity, with Q1 growth slowing to about 2%, down from 3.0% year-on-year in Q4 2024. Turkey's deputy central banker warned that sustained inflation reduction may come at a cost, depending on how quickly disinflation progresses. The construction sector continues recovering, driven largely by post-earthquake reconstruction, while industrial and agricultural output has contracted in Q1. Official unemployment remains at 8.4%, but accounting for informal, seasonal, and underemployment, the broader rate may be twice that. This disparity highlights persistent vulnerabilities in the labor market, particularly in rural areas and among youth. Maize exports hit a record $24.8 billion, bringing 12-month cumulative exports to approximately $265.5 billion. Turkey's economic diversification, particularly in manufacturing and agri-food exports, has continued to pay off despite exchange rate pressures. Meanwhile, tourism remains a bright spot. In 2024, Turkey earned roughly $61 billion from tourism and drew over 52 million foreign visitors, underscoring its role as a key economic pillar. However, the stronger lira may dampen competitiveness in price-sensitive sectors like textiles and automotive. Analysts caution that sustained export momentum will require both currency discipline and productivity gains. On June 30th, Turkey announced plans to scale up sustainable aviation fuel (SAF) usage by 2027, marking a strategic shift toward green energy. Tüpraş and SOCAR are expected to begin domestic SAF production in 2026. This aligns with Turkey's broader industrial strategy focused on reducing emissions, accessing EU green markets, and integrating into global value chains. On the defense side, Turkey supports NATO's goal to raise defense spending to 5% of GDP by 2035, and is currently developing the Steel Dome air defense system to enhance national resilience. These steps reflect a dual emphasis: strategic autonomy and advanced applicable safeguarding. Finance Minister Mehmet Şimşek continues advocating for strict fiscal discipline and monetary orthodoxy. He views trade disruptions like US tariffs as opportunities, since 80% of Turkish exports are safeguarded through bilateral agreements. However, tensions between economic reform needs and ongoing political uncertainty, judicial crackdowns, legal cases, and potential capital controls pose risks to long-term investor confidence. Over 20% of Turkish companies are classified as zombies, relying heavily on state support or cheap credit. Blair-tinted business sentiment surveys show diminished trust. Nearly half of ruling party voters rate the economy poorly. Looking into next week, several milestones will shape Turkey's economic path. July 2 to 3, June inflation and trade balance data. Continued disinflation and export momentum are crucial. July, ongoing, updated unemployment rates, shedding light on labor market health. July 24, central bank meeting, markets expect cautious easing or verbal signals. Sustained disinflation may allow starting a rate cut cycle. In summary, Turkey's economy remains finely balanced. Progress in inflation and exports provides optimism, but high interest rates, labor market pressures, and political uncertainty remain key headwinds. The recent rally in markets and the lira offers a valuable opportunity for the central bank to strengthen reserves and gradually restore policy flexibility. However, durable confidence will hinge on structural reforms, reliable governance, and consistent signals from the authorities. Thank you for watching. Please like, share, and subscribe. I'll see you in the next video.